Okay, let's go ahead and get into the stock market technical analysis. We have the Federal Reserve coming out today with their meeting minutes and the press conference. So we'll go through kind of that. We'll look at Amazon because they reported earnings, and AMD did as well as SMCI. So we'll just get into a couple things before the Fed. So guys, if you're finding value in the content, please drop me a thumbs up. I do appreciate that. It's supposedly supposed to help the channel, so please just click the button. And if you're interested in getting additional market insights, lots of different trade ideas, I'm putting a lot of stuff out in there. Typically, private member group, link in the description below, $5 a month. Check it out. If you don't like it or you don't find value, you can always cancel. At the most you have to risk is $5. All right. All right, so let's get into it. Triple Qs. We obviously the Fed's coming out today. On the triple Qs, I have to go down to the hourly really to indicate maybe what's going to happen in the short term. You can see we're sitting right there at support 421. If I roll out, we had some reactions there in the past. There's one right there, a couple right through there. There's a reaction there, and we're just kind of hovering right on it. So I don't think we're going to break down ahead of the Fed. I think it'll probably hold right in this area. So that's it. I mean, if it starts to break down ahead of the Fed, it's just tricky right ahead of a big major market moving event because you can get a lot of whipsaws. So as of right now, I think we're going to hold, and we could rally. We could see a rally potentially up to this trend line here, or there's resistance right at 429, or I've talked about the potential for them to run up and pop a bunch of stops. Okay, if I roll back to the daily chart, you can see this was a big sideways trading range, and we basically got right to that level and rejected cleanly off of that level. Usually you don't see that. Usually when you see when there's a perfect and clean and clear level of resistance, you're either going to stop short of that level or overshoot it. But in this case, we basically traded right to it, perfect tag of it, and then rejected, boom. So we'll see what the Fed does. If they pop it, I could see them running I could see that stop rate where they run it into that level, intraday, kind of pop it up in there on some momentum, run a bunch of stops, and then turn around and reverse it. Otherwise, the other alternative, and I guess the way that I'm leaning right now, if I had to pick one direction, then I guess I'm going to pick downside. You've got the bear flag, and it's a pretty clean and clear flag. There's your flag pull. You flagged out, and we're already starting to reject and impulsively head lower. So, actually, the flag is a little bit bigger than that. It's about there. So again, it sets us up for a push down to about 403. All right, and that 200-day moving average, and we've actually already started to break down. So if I had to lean one way or the other, then I guess the market's going to sell off on the Fed. I guess they're going to come out extremely hawkish, and the market's going to sell off on the Fed. All right, that's the way I'm leaning as of right now. But leading up into the Fed, we might see a little bit of a rally. Maybe even the initial move after the Fed might bounce up and then sell off. So that's where I'm at on there. Let's go to the Nasdaq futures. There's a little bit more information we can get from that one. So on this one, you'll see on the hourly chart on the Nasdaq futures, we've got this trend line right here, and you can see support, just a short-term trend line on the hourly, held it here, starting to break down on this, not impulsively though. We're just barely breaking down, and we do have some bullish divergence here on the hourly chart. So that tells me that this could just be a little false breakdown ahead of the Fed, and then boom, they might pop it up. So, in general, I am hesitant to say that we're going to just completely crash right after the Fed. I could see them doing something like this. Fed comes out with their minutes, the market algos just fire up with a bullish move, maybe hit some resistance right about there, and then reverse and start making that strong push to the downside. Okay, I am expecting it to be a strong, when it does reverse, or if it does go down, I am expecting it to be a strong push to the downside because, if you go back to the daily chart, it's just consistent with this bear flag pattern. You have multiple days of, pretty strong selling, and then you flag out, and then you continue the strong selling. The selling to the down, a bear flag continuation pattern, you see equally impulsive selling typically. So that's what I'm looking for on that one. All right, interest rates, because obviously the Fed is all about interest rates. I'm looking at the 10-year Treasury, and again, I see no clues that the interest rates are going to fall. In general, I see an uptrend. You can see, and this is just going back, I mean, you roll out, you've got an uptrend in interest rates, 10-year Treasury, and in the short term right there on this daily chart, we have an uptrend. No indication of a reversal. So if I had to guess, there's a gap to fill right here. I guess if I had to guess, which ultimately is what it is, especially right ahead of the Fed. I mean, everything is a guess. We're just using the charts to make a prop, put the probabilities in our favor. Nothing's a guarantee. But if I had to guess, I think the interest rates pop, maybe fill this gap, push up to about 4.79 or so for the next move. And again, that's going to freak the market out. The markets, the higher interest rates go, the more and more the market should sell off. And then if I flip over to the dollar, we got to always want to look at that. Again, no clues, no indication that the dollar is going to sell off. And in general, I see kind of an uptrend about there. I see the dollar rising. It's up near the highs right now. And there's no sell signal, no real clue or indication that the dollar is going to sell off. You've got bullish momentum in the dollar, all right? You have bullish price action. So dollar's rising. That should continue to put pressure on the markets. It should continue to put pressure on gold as well. The miners are up a little bit today, but gold's basically flat. And I think gold's going to continue to correct or sell off. The miners should follow suit. Oil, big downside move in oil today. It looks like it's coming into support right about now. So it's actually kind of an interesting spot to go long here. We're looking at oil futures. And again, I've got some support and the 200-day right there, down 3% on this push down. And looks like a good spot to buy the dip for oil. Now, oil stocks, like DVN's the one that we were long. Again, I took profit on that one. Nice profitable trade. Another winner that I don't get credit for from a lot of the trolls, but whatever. This one, basically, we're breaking support. I had some support right here about 50, 75. Yeah, right in there. We're breaking support. So I think we're probably going to continue a little lower. All right. Even though oil's holding support, these things are, can swing a little bit more. So again, probably going to come down to about right there, about 47.50 or so should be support. And that's where I'd want to be buying the dip on that. Again, I do like this for, buying the dip in a longer term trade, but yeah, 47.50 or so and then for the next rally. Okay, let's look at Amazon. Amazon, popped after earnings, but there's no technical change here. So it's really not, it's just noise. Nothing's really changed. Resistance right up here at about 180.75, rallied up into that resistance, but getting rejected and held below. So that's holding as resistance. So I think we're coming lower in Amazon in the near future. And that is really it. Amazon didn't really move the needle for the markets. Nvidia, you can see they're selling that thing down 5%. And so, yeah, it continues to look to trend lower. So I think Nvidia is coming down as well. Again, lower highs, lower lows. All right, I think Nvidia is about to push down to make a lower low. Probably going to push down to about 692.50. That would be, there's good support down there. And then if you Microsoft's up. Some of the Mag 7s are up, but it's noise. There's no technical change. Microsoft broke that support and pretty much gave back all the post-earnings gains, all right? Boom, they pop it up on earnings. All the dumb money comes out, especially on my channel, come out and, Microsoft earnings are great. Oh, buy everything's going to the moon. And the smart money says, thank you, we're taking our money and we're exiting. Again, big money has to get out with liquidity. They need, if they have a big position, billions of dollars, and they want to get out of a position, they need buyers. They need buyers to sell to. So, something like earnings generates a bunch of dumb money coming in and saying, earnings are great, we want to buy. while they're saying, thank you, I can exit my position. Here you go. Sold to you. And so there you go. That's, Microsoft's been selling off after earnings. And then same with Google, actually. There's Google. Boom. Earnings, sold to you, my friend. And nothing but sold. Back below resistance. So I do think we are probably coming lower on that one as well. CVS reported earnings, and I'm looking at a weekly chart here, and what I've got is a major sell signal on the weekly. You can see this goes all the way back to 2019, March of 2019. You've got support. Little tag, didn't quite get there, but generally you can see this week. Now, unless they step in for the remainder of the week and recover this, then this is a weekly sell signal, which indicates, basically this stock is going into a bear market. We had a double top, all right there. And we have a big weekly sell signal telling me that, these big weekly sell signals indicate that you're probably heading into a bear market, at least on this stock. Okay, I'm just talking this stock here. But yeah, that's what that looks like, heading lower. So yeah, just watch that. I mean, obviously, if they can rally it back up and recover, and then it's a false breakdown, then that changes the story. But as of right now, big weekly sell signal. And SMCI, they reported earnings. Now, again, I talked about how I was anticipating if I had, again, I always kind of play the guessing game, but if I had to guess, and this was before earnings came out, I said it was likely going to head lower. Sure enough, gapping down. I think we were down almost 18% at some point. You can see all the way down here. Yeah, about 18% or so. Hitting that support, though, on the daily, you can see support. This is where they held it last time. And, to gap down right to that support, it makes sense you're going to bounce there. So, I closed out my short trade that I had in SMCI that, again, I picked back up right here. So on this one, we caught this big move down, okay? Covered the short trade at support, rallied it up, stepped in. I think I stepped in right about here. So, it started to go against me a little bit. But again, you're never going to, I always want to be early. I don't want to be late, all right? I'd rather be early than late. So in general, stepped in a little early. Everything looked okay technically. Boom, gap down, cover, take profit. Just those moves alone. I mean, if you look at this gap down, that was 22%. This gap down, 18%. And I didn't go long on this thing, but in general, that's roughly almost a 40% combined gain just trading this thing. Now, I do think there's more downside, but we need to take out this support. It's about 697-ish, 697.50, somewhere right in there. Daily close below that. You really should get this thing going to the downside. Probably a straight flush to the 200. Likely going to catch a bounce. Could bounce all the way back to resistance and then down to our final profit target, which is about 356. What is it? It's about 356.50 or so, right in there. So that is that. Okay, and I did give this to the private member group, but I'll put it out in the public channel. This is a short-term trade idea. Let me go to the hourly. So this is Eli Lilly. They posted good earnings, rallied up strong. And again, I talked about this in my channel on my videos. I said, I was going to be flat this thing into earnings because I could easily see it gapping up, moving higher on earnings because it was sitting right at support. Let me go back to the daily. On the daily, you can see, boom, right at support on the trend line. Okay, so coming into earnings right on support, you're probably going to bounce. That's the probable thing. Now, we do have negative divergence telling me that the next move after this bounce is down and very likely going to break this support. Okay, the divergence is what's guiding me on that. So this rally right into earnings was a new divergent high, and I do believe there's going to be nothing but selling basically now from this moment. Now, if we go down to the hourly, the trade idea is to fade the gap. So here's the gap on earnings right there. You can see all these hourly candles. They've been trying to hold that. And if that breaks, it's about 670 or 768.40 or so. If that breaks, you're very likely going to come down and fill the gap, probably hit that trend line again. Maybe a little minor bounce there, but at that, I would expect it to be a minor bounce this time. Nothing that's really that major. So come down, hit the gap. hold there, maybe a small little minor bounce, and then ultimately break trendline support. All right, and then you'll get the larger sell signal when you break trendline support on the daily chart. That's what I'm showing right here. So one way to play it is short it when it enters the gap, down to gap fill. You could cover that short if you wanted to, or if you believe, like I do, that it's going to break the trendline support, you could kind of hang tough and just set your stop, slightly above where your entry was, so you don't really give any back. Or you could trail your stop down a little bit if you wanted to lock in some profit. But then ultimately, if it does break that daily support, you've got a really good entry on now a swing position, which should drop right to about 672.50 for the next level of support. Okay, that's the trade idea. That's a trade setup. Keep an eye out for it. That's all I got. Fed's going to come out here in about an hour, so we'll see how that kind of trades out, and I will catch you guys on the next one. Take care.